Air Canada's profit dropped by almost half, but the company did see growth in revenue. The country's biggest airline reported higher capacity, and it also says it saw strong demand for Mediterranean vacations specifically. However, it did say there was disruption in its business to France, some people avoiding that country because of the Olympics. We're joined by Trent. He's head of America's Airlines and Latin Transports with Citi. Stephen, always great to see you. Air Canada obviously caught up in the pessimism that surrounds a lot of aviation stocks right now. There are worries over price cutting. Give us your take. Is Air Canada, has it been forced to reduce fares?
Well, good afternoon, and thank you very much for having me on. So I think Air Canada is seeing some of the same short-term headwinds that many airlines are seeing right now. And I think part of it is coming from, in some corridors, some short-term mismatch between capacity and demand. On a longer-term basis, these businesses look good, but this has certainly been a tough time to be investing in risk. So short-term confluence of factors have created some difficulties for the stock.
You have an outperform on the stock or a buy rating. You feel investors' concerns are overdone. The share's down more than 30% in the past year.
Yeah, so I do think that the investor concern is overdone and the stock looks oversold. And when we look at what's going on across the space, we've seen airlines with weak results, of course, have weak stock price reaction. But we've also seen some of the same stock price reactions for airlines that have put up good and very good numbers. So I'm not saying that Air Canada hasn't had its challenges on the North Atlantic and some of the Central America, South America corridors that it runs. But we're looking at a quarter coming off of a torrid 2023 when air travel boomed again in Canada after aviation authorities lifted COVID-era restrictions. And we're still looking at a case where the carrier generated almost $500 million of free cash flow. I wouldn't particularly characterize that as a failure. And as we look going forward and we look at these various carriers that probably have good opportunities for self-help, good opportunities for course correct, we look at Air Canada's seat mile costs. They actually didn't rise that much versus most of the North American pairs. So I don't 100% buy the doom and gloom that's baked into the stock price.
Yeah, as you say, free cash flow about $450 million. Now, I know it was down from almost $1 billion a year ago, but you had thought there was a risk they'd burn cash in the quarter.
Correct. So relative to 2023, we'd expect a lot more working capital headwind. And that working capital headwind did not 100% materialize. The carrier has also done a very good job on what it's done on the balance sheet. So the free cash flow generation year to date, leverage is down to just 1x. That's actually better than most carriers in the world today. So looking at the performance in terms of what they've been able to do vis-a-vis net interest expense, that's probably something else that was helpful from the cash burn perspective. And then we have to think as well about moving some of the CapEx to the right. So looking at the confluence of those factors once again, the 2025, 2026 outlook from a free cash flow perspective, that is a constructive view.
Now, Stephen, I'm a terrible tightwad. I won't pay up for an airline seat. I'll ride in the luggage compartment if it'll save me money. But some people will lay out for a premium cabin spot. And Air Canada saw decent growth in those premium seats.
They did. So premium cabin revenue actually outpaced main cabin revenue. So that's not something entirely dissimilar versus what we saw with the newest network airlines in the second quarter. Premium cabin demand is still very good. ancillary products, co-branded card and loyalty, that's still very good. What we've seen in North America is maybe somewhat of a mismatch in terms of the amount of main cabin and basic economy capacity that's been out there. And that's not specifically an Air Canada issue. But I would say in terms of the positive earnings drivers, premium cabin was exceeding the growth of main, which is something we see on this side of the fence as well.
Can you remind us, Stephen, what has been the trend in business travel? Because, I mean, for years, that was a crucial source of profits for the airlines. Not people like me who are happy going in steerage. Has business travel recovered from 2019?
Yeah, great question. It actually hasn't. And I would say the demand, the underlying demand is still there. But I would say the underlying demand has shifted somewhat into different categories. So one thing that we have seen post-pandemic, more blended travel today versus what we used to see. And I think some of that's a consequence of many consumers no longer 5 days a week in the office. And these hybrid work trends, to some extent, have changed consumer behavior, including the way consumers and business people purchase tickets. So not to say that managed business travel is gone, but indeed it is not back to 2019 levels. And I think that shift where it looks like it could be at least somewhat of a structural shift, this has led airlines to plan differently about how they're offering their cabins to the public and in what ticket buckets and configurations.